Hi guys, hope you're good. Update on the challenge. We're currently sitting at 4.6% profit, which is 209,218. That's 57.5% of the way towards the target, so well over halfway now. I've had two more trades since the last update. Last Friday after NFP, there was a Euro USD sell, and yesterday, there's three. There's a US dollar CAD sell yesterday and a Euro New Zealand dollar sell also. I played a bit of a risky game because I wanted to demonstrate why new traders get stopped out and then price goes on to hit their target. It's a very common thing. It's very frustrating. It also causes traders to miss out on valuable data collection. So everything we do in the group mentoring is about data collection. It's the only way to improve as a trader. So for example, on Friday after NFP, there was two levels on Euro USD. One was inside the daily range, the average daily range, and one was outside the average daily range. Now, a new trader is always looking at the charts, looking in the market to decide where they can put their capital. Now, an experienced and professional trader is looking at the market to see where the majority, the masses who are driving the market, are going to offload their positions, and that's where they get into the market. Now, over time, as I was developing as a trader, stop losses would really frustrate me, so I implemented a rule where I'd have a backup trade instead of a stop loss, just for the purposes of data collection, so I could assess what I was seeing in the market to see how well price was reacting to those things. So what I noticed after a time was that whenever my backup trade was triggered, it had over 90% success rate, when my first had around a 60% success rate. So all I did was, when I had two levels on a chart, I just disregard the first one and only take the second one. If the first one worked, then I would not take the second one. And that's how I started collecting data, because it just channeled me in the right directions. So that scenario happened on Friday, and I was really anxious because I wanted to try and demonstrate it. I just thought I could be over risked here and make myself look like an idiot, but luckily it played out. And then a similar thing happened on dollar CAD. So dollar CAD sell from a nice level, around the average daily range of the pair as well. But it wasn't the dollar or CAD that was driving the market yesterday, it was oil. So although you're trading dollar CAD, you'd never put your stop loss according to the dollar CAD chart, because that's not driving the market. You have to look at the market driver. Dollar CAD isn't going to stop until the market driver stops. And it's the same with every currency pair. Whatever the currency is susceptible to be driven by, you should always check to make sure that isn't pushing that currency pair at the time that you want to enter a trade. Because what will generally happen is you'll be stopped out, and then when the driver hits its level, price will then reverse and go to your target. So because you're using your chart of that currency pair to derive a stop loss, you're looking in the wrong place. You shouldn't even be looking at it for your entry or your stop loss. You should only be looking for your target areas. And it seems alien, but it's the way to trade. It's the way that doing all these steps allow you to collect data as well and track your performance. So there was a Euro New Zealand dollar sell as well, which in the same vein, Euro wasn't driving the market, New Zealand dollar was. So we had to find out where New Zealand dollar was going to stop before entering the market, and it played out perfectly. Although it didn't, Euro New Zealand dollar didn't go any further, so I didn't get the opportunity to take a loss and re-enter the market to demonstrate the process. But the first two trades I did, and we'll go on the charts now, have a look, and then hopefully it'll become a bit clearer. So there's the balance So obviously there's $220 of costs there, so that's the profit, and then 209,218 is the current balance. So let's have a look at the three trades that we've taken since the last update. How's that chart looking? Yeah, that's fine. So first one, Euro USD on the back of NFP on Friday. So you can see the move from NFP there straight up. So a lot of traders are going to be looking at this level here. Oh, it's visible on the 4 hour. They're going to put a stop above this level. And they're going to get stopped out, and then the market's going to reverse and move to their target area. But due to the nature of the move, this level being breached and then this level becomes more significant because the next level is up here. So the market isn't going to go another 100 pips because the NFP outcome wasn't market shocking. It wasn't, enough to keep driving the market. So because this first level breached, it increases the probability of the second level working. So if you can just cut out the first setup that you see, this is only if you're a trader that takes a lot of losses, then you could benefit from just scrapping the first setup that you see on a currency pair and only taking the one after. And I can guarantee your trading will improve overnight. So the entry from there failed with a tight stop loss, and then how I would normally trade when I was a developing trader was I'd have an entry here, I'd have a second entry here, and a stop loss above for both currency pairs, and then my target would be the initial target of this, the first area of potential struggle, which was actually down here, but I closed it on Friday anyway, so it was I didn't want to hold for the weekend, so I could have taken a lot more out of the market, but once this trade here was in a little bit of profit towards the end of the evening, I just closed the trade because, like I said, I didn't want to hold over the weekend on the challenge and carry that extra risk. And it's not even about carrying the extra risk, it's about just having peace of mind over the weekend, not waiting for the market to open on a Sunday to see what's happening. It's just a trading challenge. I'm not bothered. I'm not interested in taking anything that's gonna make me take my attention away from what I want to do, like on a Sunday evening. So Euro USD sell there, played out nicely. We got the two entries here. So the first entry was the loss, and then the second entry was the profit. So that was an unnecessary loss, but like I said earlier, it was important for me to show traders why they get stopped out and then the market goes on to their target. And then there's another example on the next trade that I took, which was dollar CAD. So we had this level here. Which is good for a sell, nothing wrong with that. Only problem is 40 pips drawdown. Now, a lot of traders would have been stopped out at that level, even though they shouldn't have, because they shouldn't have been looking. Because you've got when prices come into your level, there's a check sheet that we have in the group mentoring channel that you have to check the currency pair that you're about to take, and then assess all of the potential things that may be driving the market. So for dollar CAD, you've got stocks, you've got yields, bonds, oil. It just could be US dollar itself. There's lots that could be driving the dollar CAD. It's quite a heavily influenced pair by a lot of things. So people entering here stopped out, and then annoyingly the market's come back down into profit. And again, another situation where a trader can be left really frustrated, and these are avoidable if you know where to look. So if you're entering this level here, you can't have a stop loss which is associated to this pair, because this pair is irrelevant to the move that's happening. It's oil that was driving this market, so whenever oil stops, if oil breaches a strong level, then that's where you take a loss. So your focus is on the wrong place, and a lot of people say, I guess a very common question I get asked is, where do you put your stop loss? And do you put it X number of pips past a level, or do you put it do you just use a certain number of pips? No, I don't. Everything has to be flexible. There's no point in taking a loss on dollar CAD if oil is hitting about to hit a strong level, and it was outside of its daily range, and it hit a level, and that's what pulled back the market. It's not a case of using a currency chart to plot a stop loss. It's so much more to it than that. And new traders think that they can just look at a currency pair and manage everything off that pair, and they have no idea what drives the market. And that's where the secret is. Once you know what drives the market, what's causing market flows, then you become powerful enough to see why things are moving, where they might stop, get better entries, and trade safer at the end of the day. Because that's what it's about. It's about preserving your capital. And then yesterday, Euro New Zealand dollar sell from this high. Price loitered around there for a while. The market was only moving because New Zealand dollar was weak. So you've got to find out where New Zealand dollar is going to stop. And New Zealand dollar isn't going to stop because Euro New Zealand dollar is at a level. There's more to it than that. So again, if you're entering a trade here, you need to be watching New Zealand dollar across the board to find out where that might stop. And even though we entered about around 12 and 1 o'clock, the market started to move yesterday. And it wasn't just excuse me, it wasn't just Euro New Zealand dollar. It was everything started moving around 12, 1 o'clock. 1 o'clock. New Zealand dollar. $12. Pound Aussie, 12 o'clock. Pound New Zealand dollar, 12 o'clock. The whole market turned because lots of driving forces hit levels at the same time. So that yesterday, if you took a trade any time before 12 to 1 o'clock, then, well, apart from Euro New Zealand dollar, because it did hit slightly earlier. The optimal time in the market yesterday to take an entry was between 12 and 1 o'clock. That's where all the levels hit, and the market turned. So you should be looking, where are the masses who are driving the market going to offload their money? And at that time yesterday, when all the assets we were watching hit levels, that's where the market turned. And that's where we capitalized and made profits from. But again, a new trader, it was highly likely that they've been stopped out because they were focusing on that currency pair, and it did a little bit too much drawdown than they thought was okay. They were stopped out, got frustrated, moved on, when all they actually had to do was sell again. which, that may seem like a reckless tactic, but if you're collecting the data, it isn't. A trade is only a method of collecting data, which you can then optimize and improve on to increase your profits that you extract from the market. So a bit of a longer video, but I just wanted to go into that in detail. But the account's well on its way. A couple of good lessons there, and it's a quiet week. Inflation data is tomorrow for US, so we might, things might pick up there, but there's still opportunities happening. And once I've had another couple of trades, I'll update again. Cheers, guys.